Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
John, how about this? I think the first one was FX options. Can you guide all the attendees into books that, you went through it so quickly.
Yeah.
Do you handle that in your book, FX options and the Greeks and everything about it?
Great question, whoever asked that. I have a couple of books out there and I'm a big fan of. I like Larry McMillan's work quite a bit. And while he doesn't address FX options per se, he does go over some of the dynamics. And Noble Dracone wrote a book as well a couple of years back that addresses the Forex market. So between those two books right there, I mean, the key thing is that you really understand and can embrace the Greeks and know how they work in the price and know what you can do in terms of neutralizing them or increasing your exposure to them. And so for me, any one of a number of books by Larry McMillan does a good job there. But ultimately, though, you still need to have an opinion on the market in terms of where the market's going. If you're going to be in a bull call spread, it's because you think the market's going up. And for me, a larger question is like, what's my methodology behind determining if the market's going up or not? And that's where my software and the methodology that I use in the market tend to what I tend to focus on. But clearly, understanding the metrics and the structure behind what you trade is very important because I'll say this again, there's three components to being a successful trader, all right? There's the strategy you use, there's the structure you trade under, and there's the people that you have around you, okay? And that structure and that holy trinity of strategy, structure, and personnel is going to go a long way in determining how successful you are or how much you struggle as a trader.
Along those lines, John, question from Dan: How did you become a professional trader? Money manager, if you will. I think Dan wants to do that. What kind of recommendations would you have for someone that's striving to sort of get to that next level?
Sure, that's a great question, Dan. And becoming a professional trader, there's a couple different routes you can go. I actually put on a webinar that's archived. It's free to the public, and I've spoken on this a couple different times. But I've been down that route, and it's a route that you need to understand, well before you go into. And I would say, depending on what instrument you're looking to trade, like if you're looking to trade futures or Forex, you're going to want to call the NFA. They're amazingly transparent and open. I found them very helpful in terms of getting stuff set up. They have a number of bodies in place that will consult you, everything from the marketing stuff you put out to the disclosure documents you have to write to your performance numbers. So there's actually a lot of resources available on that side. I know that you can call the FINRA as well. I'm not as familiar with the equity side of the house just because of my registrations, but the NFA website's a great place to start. And understanding that basically becoming a professional money manager in the registrations, a lot of it does with how you hold yourself out. So if you hold yourself out as being a CTA, you're going to have to register. If you trade, your mother's accounts, all right, and you're not holding yourself out as CTA, you're probably not going to have to register. Having power of attorney over an account doesn't make you a professional money manager unless you went out and marketed to get that account. But again, like I would say in this case, definitely consult with your respective regulatory body that oversees that. But overall, it's a different psychology, Steve. It's a different mindset, Dan,
right,
in terms of managing other people's money as opposed to managing yourself.
Sure.
And it's a very lucrative profession, to say the least.
John, I have a question for you. Dan wanted to know what was working now, and what I'd like to, not only that, but just a question for you. I mean, in all my years of trading, I always felt that you really sort of define who you are by not your best trade, but your worst trade. And you said you struggled. What was your worst time period, and what did you learn from that? And then you could also talk about what's going on now too.
Sure. I can say the time that I struggled the most was in 2003 when I'd gotten accustomed to trading. I broke my teeth in the game in '98 when I opened my first E-Trade account online. There's an E-Trade plug for you. When I opened my first E-Trade account back in '98, I was stationed in the Marine Corps. I was working at the U.S. Embassy in Tokyo, and I'd seen this tremendous volatility, and that was an amazing market to come into. And then we saw obviously the tech rally in '99, the sell-off in 2000 to 2002, and the bear market. And as we talked about earlier in the presentation, that's the market that I became accustomed to trading, was those markets from 2000 to 2002. Well, in 2003, when the bottom was put in, I'd become, definitely had gotten accustomed to making money on the short side and trading high volatility environments, and was used to a great deal of follow-through. So that first time that I was part of like my first Holocaust, if you will, or that first compression of volatility, I was really a fish out of water. And so I can say that, and when volatility comes off right away, it's normally associated with this ginormous V-bottom type of rally. And that was something that, that definitely caught me off guard, and something I struggled to work through, and have learned a great deal from that, and served me very valuably as the market's bottom this go around.
Yep, that's a good point. What do you think now?
Now in terms of which market, Steve, or just in general?
Well, in general, I guess volatility, we're looking, whether it's equity markets or even currency markets, we see lower volatility.
I think it depends on time. Yeah, go ahead.
I'm sorry. What do you see in the next month or two or three?
I think the longer way to play, the right way to play this longer term, is to. I think we're looking at a double dip scenario. I'm pretty confident in the fall we're going to see a retest. We're going to see S&P head back down again, make it a bit of a summer rally here as we go up and touch and break through these last highs, and really clip out the last bit of the shorts that came in. Because this rally, make no mistake about it, has caught a lot of people by surprise in terms of the magnitude behind it. No one's surprised with the oversold bounce, but to see the SPOOs go from 660 back up to 960 and change in the course of 2.5 months, that was priced in with the implieds. If you look back at the February and March calls and puts, it's funny because I heard some people talking about writing covered calls. Well, you still take on a component of your portfolio that's short gamma in there, and you are capping your gains at the top side by doing that. That's a whole other conversation. But in terms of going forward, I see a market that that we could get a pop here. I'm more inclined to see a move up shorter term, and then go back and test the lows again. I think that I think we're just at a big inflection point in these markets here in the next couple of weeks or so, and I'm looking volatility-wise September, October, November again to see some of the same metrics that we saw, not to the same extent per se, but to see the S&P maybe put in a deeper pullback and cough up about half of what it's put on. And then what we really do from there is going to determine, I think, 2010 and then 2011 in terms of how we put in a major psychological bottom, or are we going to begin to maybe go back and test those lows in early 2010.
Okay, we'll see how that all plays out. Moving averages, we have a question. Which ones are, I'm just actually paraphrasing, which ones are the right ones to use? Are you a big moving average guy, John?
A moving average to me, it's not so much the moving average period itself, but more or less the angle that it takes. If a moving average is sloping strongly up or down in one direction, it's probably a market I want to be associated with in terms of just taking on long or short exposure as it stands. In terms of the moving averages going sideways, it's less likely. That can be a key factor in terms of how you want to work either your long positions or short positions via your ISFX options. But for me, it's more about the slope of the moving average and not so much the period.
Gotcha. Andrew has a question about, do you consult for people that are starting hedge funds?
I definitely work with people starting hedge funds. I've given, just my feedback from having been in that space and having worked that space. And by consulting, there's a lot of ways that comes into play. A lot of managers I know, when you first get started in the game, it can be very, very overwhelming. And if anything, I just serve as a mentor and just, give people advice. And if it may just be simply, call the NFA, but speak to this person there because I know they're particularly good with that DDoC or whatever. Or call your Secretary of State office and speak to them because you may not even have to register with this because you meet the de minimis requirements. Just little things like that can provide the comfort level to people to get to the next direction.
Interesting.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.